Awesome. Well, thank you, Michael, so much for meeting me under such short notice. I mean, it's really amazing that you were able to do this morning. Um, and yeah, why don't we get right into it?
Yeah, no, I'm happy to help. I'm glad the scheduling worked out, and yeah, sometimes things just happen. So that was good. I'm glad you were available as well. So I'm looking forward to helping you pursue your interests in investment management. That's great.
Thank you. Can you tell me a little bit about the day-to-day responsibilities as an investment advisor at Morgan Stanley?
Sure. Yeah. So, um, I mean, what I do basically on a day-to-day basis is we have a bunch of clients, and our primary responsibility to them is financial planning. So we help decide like how they're budgeting. Are they on track for retirement? Are they invested in the right types of things? And then from those, from the financial plan, ultimately I come up with an investment strategy for the family. And that investment strategy would involve investing in different types of stocks and bonds and some other types of investments. But really, on a day-to-day basis, it's handling requests from clients. It's strategizing and doing research about investment opportunities, and then at the end of the day, meeting with people, meeting with clients, meeting with prospects to further the business.
Interesting. What do you mean when you say prospects?
So the way that honestly, the way that we get paid is by having clients pay for our services. And so you always want to have new clients coming in. And so when I say prospects, we're always looking for new relationships to work with. And in some cases, we will get those opportunities from existing clients. They may have a friend or a family member that says, "Hey, I really like what you're doing. I'd love you to meet my brother Tom." And they seem to need some help on the financial planning or investment side. Maybe you could help them. And so doing those types of activities, getting new clients is a big part of continuing to grow the business, which ultimately results in more compensation.
Interesting.
So, mhm.
What led you to pursue a career in finance, and how did you get your start in the industry?
So what got me first interested was an economics class in high school. The teacher in high school he was really good, and he had some interests in investments specifically as well. And so that got me interested in that side of the business right away. Um, However, when I went to college, I actually started in college as a computer science major. So I wasn't totally convinced. And then I started as a computer science major, made it one semester, and said, I don't want to do this anymore. And so I switched over to finance, and you never looked back. I kind of, as soon as I started taking those classes, I enjoyed it. And then I minored in accounting to give me some of that extra background. Um, how did I get into investment management? So obviously, I graduated with a finance degree, and that helped. And what I did is my first job out of college was working at a bank as an internal auditor, actually. And so, what internal auditors do is they have the opportunity to go into a lot of the different business units in a bank and see how they operate. So there's the private, personal investment management group, there's a corporate investment management group, there's trusts, there's all these different groups. And so it was a really interesting opportunity for me to get to see a lot of different aspects of finance, of investments, of banking in general. And so it was through that exposure that ultimately said, you know what, I definitely want to get into investment management. And then I saw the path, and then that's what I kind of went down that road and did the things I needed to do to get into it where I was actually doing investment management.
Hmm, interesting. How do you approach building and maintaining relationships with your clients?
Well, at the end of the day, having good relationships with clients is the single most important aspect of what we do, right? If we don't have clients, I don't make a living. And so building those relationships, getting clients to get to know you at a personal level, to trust you, to in some regards rely on you. And so how that happens is a lot of communication. You're on the phone, you're meeting in person with people, but you're getting to know them. You're getting to know what their needs are, how you can help them, and that trust doesn't manifest itself immediately. You have to be with someone for a while for them to really, get comfortable and gain that trust. And so it's like I said, it's a big part of what I do. It's meeting with clients, it's calling clients if the markets are turbulent and volatile, knowing I got to pick up the phone and talk to these people because they're going to be nervous and they want to hear what my thoughts are, what we're doing about it, and those kinds of things. And so, there's additionally, we do a lot of emailing, we do a lot of other things. So there's a lot of touch points for clients, which again, it's just giving them the confidence that we're guiding the ship for them.
Just to follow up, would you say that in terms of trust, that it's more of a financial trust, as in just their money, or as a personal trust as well, as pseudo friends?
Mm-hmm. So what it typically starts with the financial trust. That's how it starts. That's why I was brought together with these clients. And so it's typically getting them to, essentially trust us in what decisions we're making on the investment side. But what happens over time is when you work with a client for a while, you get to know them. You get to know them personally, whether it's you get to know that what their kids are doing, you get to know where they're going on vacation, you get to know what their parent, so are their parents sick? Are they having to care for their parents? And in a lot of cases, the relationship morphs into somewhat of a personal, a friendship, as well. And those are the best relationships that you have, because it's not a job anymore. It's you're picking up the phone and you're talking to a friend about, hey, what should we be doing? By the way, how's your daughter doing this? How's your son doing? And it makes the job a lot more fun, and a lot more interesting.
Thank you. How has technology changed the way you work as an investment advisor, and what impact do you think it will have in the future?
Great question. So technology. So I'm at Morgan Stanley, and as you've seen on my LinkedIn profile, and Morgan Stanley has spent literally hundreds of millions of dollars on their technology. And so where technology helps in my job is there's all sorts of avenues where I get information pushed to me. So I'm always aware of what's going on in the markets, what's happening with various things that I can sort of guide. And and there's a learning technology behind what sort of information gets pushed to me. And so from that perspective, it's incredible, and it's changed the job. It's made the job much more efficient, and I'm getting more timely information and more relevant information. Where it happens from a client perspective is clients now have the ability to pretty much do anything that they want on their app, on their Morgan Stanley app. So they can go on, they can transfer money, they can pay bills, they can technically do investments, they could pick stocks, do those types of things. And then they can in turn see research on the site as well. And then, behind the scenes with what I do, there's a lot of different technologies that allow me to communicate to a lot of clients at one time, but it looks to the clients like I'm sending them an individual email. And so what that does is it cuts down on time I have to spend banging out 50 different emails. I can write an email, send it out, and it goes to everybody in a way that makes it look like they're getting a personal email. And so that cuts down on my time. So from an efficiency perspective, it's that. And then I guess probably the final piece is cybersecurity. Technology has its benefits and its negatives, and and with technology, there's fraudsters out there that try to do things to get people's money, and and that's obviously their goal. And so financial institutions are always being targeted by either scammers or fraudsters, whatever. And so cybersecurity is a huge part of, and the evolution of that has been a huge part of what we do as well.
Just a quick follow-up. So you said you work mainly with the people, and you talked about a little bit about the app. Would you say that you're involved with pushing out notifications for the app, or is it, how do I phrase this? Is it mainly Morgan Stanley doing the work within the app and you're over the phone giving these people the ear-to-ear kind of information?
Yeah, so there's like the app, so there a lot of it comes through emails, but I don't really do anything with the app, so to speak. But what I do is I have the ability to push certain types of content to clients. There might be an article on the Silicon Bank failure or something going on with employment data, and I have the ability to somewhat customize, tailor, and push that out to certain clients. And it doesn't have to be all clients. I can say there's a subset that are really interested in this type of thing. Let's send it to these 20 clients. And so that's where some of that technology helps with the ability to do that very easily. It's a few clicks of the mouse, and I'm sending them articles and whatnot.
Interesting.
Mm-hmm.
What are some of the biggest challenges you face in your role, and how do you work to overcome them?
Biggest challenges. I would say the biggest challenges are two things. One, just the challenges of the financial markets. There's a lot that happens. Markets crash. We have economic situations that are difficult to manage. So just that day to day. But then it's not only just dealing with that, but it's also handling clients and walking them through those situations. Because in many cases, there's what I'm managing for these clients is it's their nest egg. They've saved their entire lives, and this is what they have. And if they lose it, they're broke. And so that pressure of what I'm doing directly impacts my clients' quality of life, their day to day. And so when markets do go bad or go down, which they always do, there's that's going to continue forever. It's a stressful aspect of calling clients, calming them down, but understanding that they're rightfully worried and everything. But that's probably just the biggest challenge in terms of what my day to day is, and the markets I can't control. So I'm somewhat at the whim of what happens there, and so you're reacting in many cases. But that's probably the biggest challenge or stressor of my role.
Just a quick follow-up, a little bit more of a personal question. Do you ever take it like upon yourself whenever the market does have a failure? Do you kind of see that as a fault on your own part? Ever?
No. I mean, at the end of the day, you do everything you can to put clients in the best position that they can. It's hard. I mean, you do take some of it personal. I mean, just because if the markets are down and I'm talking to a client that they're truly worried about what's going to happen. I feel it emotionally with them, and like I said, that's the hard part. That's because you've got your family, then stuff that happens to your family is stressful, but I've got a business family that's 200 people that I'm calling, and I'm somewhat related to their families because I'm managing their money and I'm managing their finances. And so, so yeah, I mean, I try not to mess up doing something, right? And if I did that, that would obviously reflect on me, but that doesn't really happen very often, knock on wood. But it is an emotional where you do feel personally um, tied to what's happening with them. So,
Thank you.
mhm.
Um, how does Morgan Stanley differentiate itself from other investment firms, and what sets it apart in the industry?
Uh, so Morgan Stanley is, in terms of wealth management, which is my world. We've spent more than any other firm out there on technology, so that benefits clients as well as me as an advisor. Um, Morgan Stanley has arguably the best investment um, options of any firm out there. We have access to more alternative investments than Merrill Lynch, Goldman Sachs, any of the other big wirehouse firms, which gives us a competitive advantage because we can get access to certain things for our clients, certain investment things for our clients that other people just, frankly, they can't get. And so, that I make the analogy that that I'm a mechanic, and the more tools that I have in my toolbox, the better I can do my job. And so Morgan Stanley has arguably the best toolbox out there because of the technology, because of the investment availability, investment option availability. Um, so and then plus they just got they've got a good um, industry leading analysts, economists, strategists that have done a good job of navigating financial markets.
That was a good analogy with the mechanic.
Yeah, yeah.
How do you stay up to date with industry news and trends, and what resources do you rely on to do so?
Um, so as I mentioned, like with technology, I get a lot of market data pushed to me automatically, which helps. So I get information from Bloomberg automatically. Bloomberg terminals I have access to, which are it can give you information on pretty much anything. The Wall Street Journal I read every day, The Economist I read, which is a periodical, and Barron's, which is a weekly periodical. So I read those types of research items every week, and then just throughout the course of the day, our equity team may send and say, "Hey, markets are up today by 0.5%. This is why." Tesla just announced that they're raising prices versus cutting prices on some of their vehicles. So I'm constantly getting data pushed to me throughout the day that gives me the ability. And so it's easier. I don't have to go seek it out in many cases. A lot of times it just sort of comes to me. So it makes things easier. But it's important. There's advisors out there that aren't up to date and up to speed on what's going on. So taking the time to read and do your own, to be up to speed on things from various sources, because if you rely on one source, you're going to get a biased perspective. And so I try to make sure I'm looking at research from Goldman Sachs, from Morgan Stanley, from Merrill Lynch, from all sorts of different places, because I don't feel that no one person has the absolute right answer. I think there's a combination of things. So
Hmm, thank you.
Mhm.
Um, how do you balance the needs and goals of your clients with the broader market trends and economic factors that impact investment decisions?
Can you repeat that? That was a long one.
Yeah, sorry. Um, how do you balance the needs and goals of your clients with the broader market trends and economic factors that impact investment decisions?
Oh, okay. Um, so, I mean, the way that we balance it, so it comes down to investment philosophy. And so for our clients, the way that we invest for our clients is in a diversified portfolio. So we're never going to have a client that's in 10 stocks and that's all that they do, right? That's way too risky. And generally the clients that we work with they're not seeking out a big risk. They're seeking out stability. They're seeking about consistency and return. And so to get that, you have to have a diversified portfolio. So what that means is we're going to have exposure to US companies, international companies, emerging market companies. We're going to have exposure to various types of bonds, maybe corporate bonds, maybe municipal bonds, maybe mortgage-backed securities. And then to complement that, we use alternatives. And alternatives is a general asset class, but that includes things like hedge funds, private equity, real estate, commodities. And so it's the combination of those in various percentages. So it's, we manage how much we're putting in each of those buckets, but that's how we manage and navigate the markets, because the markets, as I mentioned earlier, are going to bounce all over the place and we don't have control over that. So we have to play defense in certain instances where we're having exposure, where if, inflation is a big issue right now. So how do we put things into a portfolio that help combat inflationary aspects? And so that's the main reason. It's through asset allocation and shifting those allocations around to compensate for what the markets are giving us.
So quick follow-up. You said that you try to diversify the portfolio with, you said real estate, other assets such as that.
Mhm.
Do you think that that's exclusive to Morgan Stanley, or would you say that that's kind of an industry average?
Yeah, I mean, I think a lot of other firms. I mean, asset allocation is not unique to Morgan Stanley. There's a lot of other firms do that, and so the question becomes who can do it better, and that's where that gets to, if I have access to certain things to build that diversified portfolio that perhaps someone at Goldman or someone at Merrill Lynch doesn't have, that gives me a competitive advantage because I feel like I can better manage my clients' portfolios on a risk-adjusted basis because I have some of that. And a lot of it too. I rely heavily on our economists and our strategists, and so it's knowing, do you over allocate to China right now, or should you be underweight China right now, or do you like corporate bonds versus high yield bonds right now? And it's those types of decisions that differentiate an advisor, an investment manager. And the more, you're never going to get all your decisions right, but it's getting it right more often than you get it wrong. So
That makes sense. Thank you.
mhm.
What advice would you give to someone who's considering a career in investment advising or finance?
Advice would I give? I guess I would, because of the way that I came to investment management, I would say keep your eyes open to a lot of different aspects of finance. The term finance is a very broad category, as I've learned, right? And so finance can be investment management. It can mean corporate finance, where you're helping a company manage their balance sheet and make the right investment decisions. Finance can be investment banking, where you're talking about to companies, how do you merge with another company? How do you split off your sales division? How do you do those types of things? And so early on, I would suggest trying to learn about the various aspects within the finance umbrella, right? And then, and if through that exploration, you come to determine that investment management, whether it's on the individual side, which is more what I do, or there's an institutional investment management, which is managing more corporate balance or corporate investments. So foundations, pension plans, endowment funds. And so further figuring out, do you want to work with individual families or do you want to work with corporations or foundations where you're dealing with boards of directors and those types of things, which I did at one point in my career as well. But it's just trying to differentiate yourself once you figure out what it is that you want to do. So going the extra step, if you want to do investment management, well, what's going to set you apart? Are there designations that you can get? Are there, do you need an advanced degree? Do you need a master's? When do you do that? Do you wait for get a couple of years of work experience and then move on? But it's differentiating yourself, whether it's while you're in school, showing that, are you involved in the investment clubs? Are you involved in different things? Do you have leadership roles? What is your network? Building a network is utmost important, because I've seen, doors open to people that have access to a good network out there. And so it's leveraging that and building it, because when you're young on, you don't have a big network of people. And so doing everything you can, as you meet people, get their card, get their contact information, figure out a way to stay connected with them, use them as a resource. But early on, a lot of it just figuring out what you're most interested in.
That makes sense.
Mm-hmm.
Well, thank you very much. That's the last question I have.
Great.
Thank you for giving me some insight into the, investment management, side of finance, and just finance in general, how to get into it, all that sort of
Mm-hmm.
stuff. And thank you for meeting me on such short notice. I know this was really kind of, right off the starting line, but
Mm-hmm. Yeah. No, I'm glad it worked out. And was happy to share the information. And if you have any follow-ups, certainly let me know.
awesome. Thank you so much.
All right. Good luck.
Thank you.
Take care.
You too.